Welcome back, everyone, to In Conversation with Lone Star Pace. I'm joined today by Laura Rapaport, CEO and founder at Northbridge, a C-Pace capital provider that's been making headlines and waves since entering the space in 2021. One of the biggest headline items for Northbridge was a $1 billion infusion from global investment firm Carlyle last fall. That move is expected to allow Rapaport and her team to facilitate C-Pace transactions on a much larger scale. And so one of the areas that Northbridge plans to focus on is Texas. The firm has big plans for our market, including they just hired an originator that will be focusing in part on Texas. And we plan to discuss all of those strategies and what you guys have in store for us today. So Laura, thank you so much for coming on the show.
Thank you for having me.
Awesome. So you have a really impressive background in commercial real estate. I mean, this is by no means your first rodeo. But I'm always interested when people have a varied background in commercial real estate and then they come into C-Pace, what ultimately led you to want to work as a capital provider in this niche, but now mainstream form of financing?
Honestly, that's a great question. So I've sat in every seat. I've been buyer, seller, leased, owned, developed, lent on assets. And so I really saw the need for it because I've sat in all these different seats. And I've refinanced projects in the middle of construction, bought and sold them. And now I really saw this opportunity to use CPACE as a very effective tool to incentivize people to build better buildings. Where I was wrong and where we've seen a tremendous amount of growth is this use of PACE as a form of refi or rescue capital. So in addition to incentivizing people to build more effective and efficient buildings, we're also seeing it as a really effective capital markets tool now to help capital stacks fill the gap. And so where I started just from the building side and that kind of intersection has kind of widened, and we've been fortunate to meet the market where it is and have significant tailwinds.
So you guys have been actively pursuing the Texas market. What is it about Texas that makes it such a strong focus for your firm?
In addition to being a great state and so many interesting things happening on the macro basis as well as for the real estate, boots on the ground, one of the biggest change that's really changed our focus and why we are dedicating a lot of effort and to the market is the change in the program that now instead of being capped at 25% LTV, it's now capped at 35, and even changes to how capitalized interest only structures are utilized has made this a market where we are very focused. For us, I think it's also a great example of why CPACE is a truly bipartisan tool that a market like Texas that's been around and one of the leaders in CPACE assessments since inception has actually enabled the product to be even more effective as a solution for refis and rescue capital or renovations and new construction. More specifically for us, in addition to all of these structural elements, for us, it's really one of the fastest growing markets in the country with robust development pipelines across all asset classes, multi, hospitality, industrial, mixed use. We're really looking at all of it right now. And in addition to being developer friendly, it enables us to use our capital most effectively to solve problems. Are we enabling a more effective, more efficient building to be built? Because we can be that, up to 40% of the cost or, again, 35% of your LTV to be that catalyst to help the renovation or new construction start? And or are we also coming in to help a developer who built a building, a great building in a nearly zero interest rate environment, be able to pay down their lender, blend and extend, and be a form of shorter duration financing to help them bridge the gap to enable stabilization, maybe on the multifamily side or on the office side, help really stabilize the asset through more TIs and LCs, or perhaps just a full recap along with different capital partners of ours providing a whole stack solution to be able to have the owner continue to operate the asset. And they're in that case, they're being rewarded for the building a very effective building because the look back in Texas is 2 to 3 years. So we're really kind of seeing all these different reasons as to why not only, from the geographic opportunity to the good business. And we're big believers in Texas and, the many strong markets there as, strong drivers of growth now and going forward.
Yeah, absolutely. I mean, things have certainly changed over the past few years. We always say we feel very blessed to be in Texas. We wouldn't want to be in any other market right now because of all of the reasons that you just laid out. So from your vantage point, I mean, we do have a thriving C-PACE market in Texas. We are a huge contributor to the overall transaction volume nationwide. But what do you see as the biggest opportunities or gaps that have yet to be filled within our ecosystem that you think you guys will address?
For us, and I think coming to the PACE world from the institutional real estate, bricks and mortar, having built buildings and bought and sold them throughout my career, leased them as well. Most people don't realize they're already eligible for CPACE. They've already built a great building and they immediately think you have to be super green and net zero. And that's actually not the case. In fact, if you're building to a certain level of code, or you're building these improvements to your building that actually are good business because it reduces your operating expenses, maintains value, attracts tenants to your building, you already qualify. And so for me, that kind of aha light bulb moment, which has continued to really drive my interest in the market as well as borrowers of ours to take the paper, and part of it's an education, is to say, okay, if you've already done these things, you now qualify and you can now get this really effective capital that you didn't even know you could use. And now that you can take it, it's passive, it's fixed, even though it is a longer duration, 20-year plus technically paper, you can take us out in a 5-year period of time. So you actually can create a shorter duration fixed rate instrument that can solve a lot of problems, whether, and this goes to where we see a lot of opportunity, when people realize they can qualify for this, they are seeking it for refis and rescue capital. So we're seeing a lot of this kind of refinances, whether it's cash neutral, or even a cash out, or recap situations, and that, filling the gap in the capital structure. We absolutely love construction. We are also a servicer. We are actively working on construction projects across the country. And that will always continue to be a very large part of our business. But in particular, this moment, we think there's a tremendous opportunity in Texas for people to access capital across their portfolios. It might be, across a couple different assets within one portfolio, or it could be a large scale asset. And we have the ability, given our expertise in terms of creative structuring and access to capital with our partners at Carlyle, to really be that effective solution for so many.
I love it. Yeah, we tell people all the time, if you go 5 to 10% above code, which most of you are already doing, you qualify for CPACE. And they're like,
People
what?
people are doing it anyway. And that's to me where we can really provide the gap. It's not about being, again, net zero or LEED platinum. So many of the things that people are doing because that's what's expected in the market from buyers, from lenders, from tenants coming in. People are already putting these elements in. And so they're qualifying without having to do more. And so then it's, well, wait a minute, your operating expenses are also going to decrease.
Yeah, why not?
It's increasing NOI
Yeah.
and maintaining value, and that's good business. So of course you should take this. And it's just very effective capital. So I think that, in an interest rate environment that's significantly higher than when so many of these loans are due. There's 3 trillion nationally. There's $3 trillion of loans coming due over the next 3 years. This year alone, 40% of that number is extensions. And so there's this mismatch between, people being overrate real estate, interest rates increasing, lack of capital, volatility, that we can be a really effective part of, or the solution for so many different people in all these different asset classes. So we also think that, in terms of the education component, it is people, an area where we see one of the biggest challenges. Lenders are now coming to us and saying, wait a minute, this is a benefit for us. Bring us into your deal and we'll bring you into ours. And maybe you can also help us with some of the projects we have on our balance sheet to really create more liquidity for us. And so people still think of the product as it was 10 years ago. And even, we haven't historically been that active in Texas. We are now because of the changes that are happening, not only for the program, but also for the macro environment, the capital we have, and the opportunity for people to utilize in a very effective way.
Yeah, that's wonderful. We're also seeing sentiment really shifting among the senior lenders, which is very encouraging to see as well. So taking a step back a little bit, CPACE has really moved from being more of a niche financing tool into the mainstream, which is so wonderful for us to see because, like you just said, there's so many benefits. Um, there are a lot of capital providers as a result. How does your firm's approach vary from other capital providers, and how are you sort of positioning your firm to serve the Texas developers and property owners specifically?
So I think if you take a look at where PACE started, over 10 years ago, where, it started in '08, version 1.0, even version 2.0, and now maybe in version 3.0, there's really different parts of the market. There's the small balance, $2 million of PACE on an industrial building to put on solar. And part of that was starting so people could afford the upfront cost of the solar, which is very expensive, but over the useful life, it will be effective. And that really kind of was one of the reasons people used it. Many people are still very much focused on that small balance PACE, and there is a market for that, and there's a tremendous number of capital providers there, and there could be more, and more people could use it because that is a use case. But that's more of the what I call small balance, and there's a mid balance, which I'd call kind of 5 to 10 million, where that's a significant amount of money, but it's still not going to be interesting to somebody to put $10 million on a project that is $200 million or $300 million. But there is a strong cohort of borrowers that would take that money. And then you would go for the north of 10 million, which I'd call the large PACE market. And that's where we play. That these are for deals that are 10 million, 50, 100, $150 million, where PACE can be a meaningful part of the stack. Or just by the virtue of the size of the deal, a $50 million deal might be 10%, but it's still a lot of money relative to where the PACE market started. And so we have the access, because through our partnership with Carlyle, to fund any size deal. We actually only focus on deals north of $10 million. We do have a small balance partner we work with because our view is we want people who want to access this to do great projects. But for us, we can be most effective in the merging the institutional world with CPACE. We all come from the institutional real estate world. I started my career at Lehman in their CMBS group doing securitization too. There's a lot of similarities, I think, today with where CPACE is now and where CMBS was, where that institutional market was really starting to grasp it. And then the size and scale grew. And that's where we can be most effective and comfortable because we know the players, we've been on the same side as them or opposite them. And with the knowledge of, very effective creative structuring, a lot of capital to put towards things, we can really be nimble, move quickly, and provide very tailored solutions. And so I think that those three markets very much happily can coexist and should all grow. The CPACE, the small balance, medium, and large scale PACE within the PACE industry. But our differentiator is the fact that we've been in this world for 20 plus years. We've sat on the same side or opposite. We've built the buildings, we've refied them. And so we can take both the 30,000-foot view as well as in the weeds and say, okay, what are we trying to solve for here? How can we make this the most effective solution? Because you're not going to use it, nor should you, if it's not accretive. And so at the end of the day, we look first and foremost at the real estate you can't move. And then we look at the credit overlay, and then we think about the structuring of what is it that we're trying to solve for borrower or lender or both, and how can we make this much more effective if they decide to move forward with PACE as a tool. And sometimes it is not the right solution, but frequently it's something people hadn't considered. And now knowing that they can access highly flexible, structured financing to solve a myriad of problems at dollars that are in the tens and hundreds of millions of dollars per project or per, portfolio transaction, that changes people's perspective. And that's where we really can, we have differentiated ourselves.
That's wonderful. We are so excited for you guys to join us here in Texas. Our Texas hospitality spirit is always the more the merrier, and we can't wait to start doing projects with you guys. So thank you, Laura, so much for joining us.
Thank you for having me.